Hello everyone. Today is August 27th, 2024. It's Tuesday and welcome to Unday Radar Talks. PDD Holdings shares plunged 28% on Monday after the Chinese e-commerce retailer reported disappointing second quarter earnings, with revenue below expectations and revenue guidance. As the stock price plunged, the trading volume and turnover rate on that day were significantly amplified, and many investors tried to buy the stock at the bottom and believed that the stock price would rebound, but my prediction is that the stock price may continue to fall. Data shows that the daily short-selling ratio of the stock was 17.4% and 16.8% on August 23rd and 26th, respectively, while the daily short-selling ratio on August 21st and 22nd was below 16%. Although it is normal for the short-selling ratio to rise due to the sharp drop in stock prices, it still reflects that the market sentiment of the stock is relatively negative. Before the stock plunged on August 26th, $131.80 and $143.80 were both relatively concentrated areas of trading volume. After the stock price plummeted, both $105 and $99.80 generated a large volume, which indicates that a large amount of funds flowed into the market on that day to try to buy the bottom. But the outflow of funds seemed to be more, so the trading volume was relatively dispersed. Let's take a look at the capital flow data of the stock. The stock price rose by 2.9% on August 16th, and its net capital inflow was $346 million, which is much higher than usual, but the stock price fell by 4.6% on August 20th, proving that this should be a reverse outflow of capital. The capital of the stock was net outflow from August 20th to 23rd. Although the net capital outflow may be reverse in some cases, it may not be the case for this stock because the stock price fell significantly. It is worth noting that the net capital outflow of the stock on August 26th was about $40 million, which was not significantly higher than usual, but the total trading volume on that day was as high as $10 billion, which means that the capital inflow and outflow on that day increased significantly, but more funds flowed out of the market. But it does not reflect the signal that big capital has entered the market to passively or actively take over the chips. Let's take a look at the market position distribution data of the stock. After the stock price plummeted, the stock had significant position accumulation at both $105 and $99.80. Technically, the position of $99.80 may be understood as long capital, but the actual situation may not be so. This price can be a support position, but it can also be a resistance position, but I think it may be the latter. The reason is that, in addition to the evidence provided by the capital flow data, the closing price of the day was much lower than the opening price. Based on the principle of profit margin, the position where the position is accumulated should be $97 instead of $99.80. Maybe the stock price will struggle at the level of $99.80 next, but after the remaining capital sells off, the stock price may continue to fall. Let's go back to the daily chart of the stock. I am currently bearish on the stock. I don't see any signs that big funds have entered the market and are about to drive the stock price to rebound strongly. Although the trading volume on the day of the plunge was significantly enlarged, I don't think it is safe to buy the bottom at this time. For the target price, I set it at $91. Okay, guys, that's my price prediction for PDD Holdings stock. Thank you for watching. If you like my analysis, please click the subscribe button and give a thumbs up. I will bring you more latest price predictions for popular stocks in the future. See you in the next video.